We turn to the introduction then, and what we see is that Premium Trains is based in this fictional country of Thailand, which is an island nation in the northern hemisphere with a population of 30 million. So we can assume that this is a country that is perhaps relatively wealthy, quite stable, and that the consumers in this country have a reasonably high degree of purchasing power, which of course is a good thing for a company like Premium Trains. The fact that it's an island nation in the northern hemisphere might lead us to believe that there are parallels to be drawn with Great Britain. We know that the population of Great Britain is around 65 million. When you think of England, it's closer to 53 million, I think. So it's not a million miles away from Great Britain. Having said that, we cannot be certain that this is based on Britain. So we're told then that the T dollar is the currency in use here, which leads us to ask the question as to whether this is a company with exports and imports, and whether the exchange rate is going to be an important aspect for this company. What we see later in the pre-scene is that this is not a company that is making any exports, so it's not significant on that front. And with imports, there's nothing explicit stated, but maybe some of the parts it's buying for its trains, replacement parts, are coming from other countries, in which case the exchange rate with different countries would be important. It's just something to bear in mind. Thailand then, we're told, has a developed railway system. It supports extensive passenger and freight services. Interesting that freight services are mentioned, I think, twice in this pre-scene only. And we'll see in a little bit that Premium Trains is dedicated to the transport only of passengers, so it's not involved in the transport of goods from one part of the country to another. And that's interesting because it probably represents then an opportunity for this company. We'll talk about that a little bit later on. The system then, we're told, was completely government run until 1991, 25 years ago, when passenger services were actually privatized. Having said that, the government has retained ownership of the track and the stations, so each and every station along the way from one route to another are actually owned by the government, and they are in charge of maintaining the track, ensuring that it's in good condition so that the train operating companies can use it safely. And these two elements, the track and the stations, are managed by Thailand Rail, which is a government-run organisation. So reflecting then on the first paragraph, and it's obvious that the government is a key player in this particular industry. You think of Mendelow's matrix and whether a stakeholder has high power or low power, high interest or low interest, and we can say with the government in this industry for certain they have high power and they have a high degree of interest with what goes on in this industry. That makes them a key player. So it's not a completely free market. The government is present. We'll see later on, it influences the prices that are set. It influences a number of different policies. It sets out the routes that can be taken. It assigns different train operating companies to a number of the routes. It's receiving a franchise fee. It manages the tracks and the stations. Very, very present, very influential. And it's not a completely free market because as well you have train operating companies getting 15-year licenses, the right to transport passengers on one particular route, and then they have no actual other competitors on that particular route. Having said that, there will be substitutes like buses and other companies, even airlines, that could transport passengers over the same routes, but they are substitutes, not direct competition. We think as well of E1 and the different motives for different types of organizations, okay? You think of different types of organizations like private companies, government bodies, NGOs, etc. Here we have potential for tension between the government and private companies. And the private companies we will see are these train operating companies like Premium Trains. For the private companies, the train operating companies, they are fixated on profit, okay? Generating wealth for their shareholders and the owners of the company versus, the government interest in the public at large. They're focused on the 3 E's. You'll remember they are economy, efficiency, and effectiveness. Okay, we'll be looking at those in a little bit more detail soon. So they want to get the maximum benefit to the beneficiaries of these services. So we're talking about the public that uses these trains. Second paragraph, then we see a little bit more about the privatization and the passenger services throughout the country. When privatization occurred, they were actually split into mainline routes and short routes. We have 8 mainline routes and 25 shorter routes. So the mainline routes are longer routes between some major cities, and then you have these shorter routes that connect less populous cities and towns to some of the main cities in Toland. The mainline routes are the longest and create a network that links all the major cities, as I said, and some of the largest towns with Central City. This is the capital city of Toland. And the short routes then throughout the country, they're joining up cities and towns, smaller cities and towns, and they're used often by commuters to travel to and from their place of work and their home places. And then in the next paragraph, we're told that each route has a train's passenger service franchise associated with it. And these franchises, the right to operate trains on these routes, are handed out by the government every 15 years. There are 33 franchises in total, which equals the 8 mainline routes plus the 25 short routes. And they're issued to a total of 10 train operating companies. So there are 10 train operating companies like Premium Trains being run in Toland, and they're fighting for the right to get these 33 franchises given out by the government. So Premium Trains is one of these companies, and each franchise runs for a period of 15 years. At the end of the initial franchise period, which would have run between 1991, when it was privatized, and 2005, all but one of the train operating companies was awarded the same franchises for a further 15 years. So it's quite a stable competitive environment, you would say, because they're 9 of the 10 original train operating companies is still present. They're still there, and they're actually operating the same routes. So there's a degree of stability inherent in this particular industry. But there is a risk. Having said all of that, there's a 10% probability, let's say, of losing the franchise rights. On the flip side of that is that there's a 90% probability that a train operating company will actually be able to lock in a monopolistic type agreement that will be favourable, obviously, for them, and they lock down certain routes. For Premium Trains, they've locked down the rights to 2 mainline routes for 15 years. They're not going to have much direct competition on those routes, none at all. In fact, there may have, as I said before, some substitutes like bus companies and airlines, etc., but no direct competition. So the first phase of the privatization ran from 1991 to 2005. The second phase is ongoing, started in 2006. It's finishing in 2020, which means it's coming up in just 3 years. So Premium Trains has a potential headache coming up. They need to be careful. They need to satisfy the government to ensure that they win back those franchise rights. And the question also needs to be raised as to what possibility it has of winning other franchises. Because are they going to just be content with having 2 franchises out of 33? Okay, so if you think about it, there are 10 operating companies, 33 franchises that would average at 3.3 routes per train operating company. Premium has just 2. They're not present at all on the short routes, and there are 25 of them. Are they going to just sit back and be content to operate those 2 routes out of 33? If I was a shareholder in Premium Trains, I wouldn't be happy with that. And I'm sure the senior management isn't happy to just sit back and be happy with those 2 routes. So because there's a franchise in place, we can assume early on that there's some kind of fee or a royalty being paid to the government. We'll see in a while it's actually quite a significant fee. Moving to the next paragraph then, and we see that Premium Trains actually belongs to the Omni Travel Group. It's a subsidiary. And there's very little about the Omni Travel Group in this pre-scene. We don't know if it's a stock exchange listed company, a private company or whatever. What we do know is that they have a number of other subsidiaries in the travel sector. We could assume maybe there could be some bus companies, maybe some airlines even. There is maybe an option there for Premium Trains to establish tie-in complementary services with some of their brothers and sisters under the Omni Travel Group umbrella. So maybe there's some possibilities there. Also, the fact that they're owned by the Omni Travel Group, we might assume that the Omni Travel Group has maybe some significant financial muscle to lend to Premium Trains, and that they can bankroll some investments and things like that, and they can lend some expertise also to come to bear on their investment decisions and things like that. We'll see later on when we look at the financial statements that Premium Trains is a financially conservative company. It isn't carrying any debt really. It has a high cash position. It's keeping reserves. It's not spending cash willy-nilly. It's not really financially risky company, and it's also got a high degree of liquidity. So maybe there is more scope for investment. We see that it actually has a depreciating stock of property, plant and equipment. Maybe there is a need to invest in more trains and upgrade their trains because they're actually quite old, as we'll see later on. And then what we see in the final paragraph is a little bit of news about your particular role. You're a finance officer. You work in the finance department of Premium Trains. Your role is varied and you're moved into different parts of the business to perform different tasks. And what this is telling us is that you can expect anything in the exam. So very open-ended opening here. You could be asked anything from reporting and payroll, which are the 2 financial accounting functions. We'll see that later on. And the 2 management accounting functions in the finance area are train operations and maintenance. So it's leaving this very open. You could be asked about anything on exam day. Remember, you're a finance officer, so you're going to be assisting decision makers. You're going to be assisting managers, senior managers, maybe directors as well. Rather than you actually taking any of the big decisions, they're going to be coming to you for assistance with some of the big decisions. Technical skills play a very important part in the operational case study. They make up 64% of the skills, of the marks you're meant to exhibit. So when we think about the finance officer role, some of the important things to note are that you're going to have a short-term focus, whereas, at the strategic level, you're going to have a long-term focus. At the management level, it's more a mid-term focus, while at the operational level, surprise, surprise, it's going to be a short-term focus. You're going to have key decision makers coming to you for help on matters that have significance over the next few months, the next few weeks, a year maximum perhaps. Some of the big areas then on the operational case study, the ones that come up again and again, costing is very important. Budgeting as well. There is a section in this pre-scene dedicated to the 2018 budgets. Variance analysis, okay, looking at sales variance reports, reflecting on the reasons for variations between budget and the actuals. That's really important. Working capital management. This is a company, as I said before, we'll see in the financial statements, that has quite a conservative approach to working capital. Its current assets are significantly higher than its current liabilities. It's not taking any risks there. It's got a strong liquidity. So we'll be looking at that in more detail soon. Cash management is important at this level too. The cash position of this company is also quite robust. And risk assessment in the short term is important at this level. We've talked about one risk already. Coming up in 3 years' time, you've got the possibility of losing the franchise, which would be disaster, would put Premium Trains out of business most likely. There's a 10% probability of that happening. So they need to keep that in mind over the coming years. With the next section then, we have the train operating company performance statistics. And this information is coming from the Táillín government's report on performance of the different operating companies in 2016. So again, this is a reminder of just how important the government is. The government is issuing a report and they're saying, look, this is what is important in this industry. We are interested in the revenues being earned and we're interested in punctuality. And what does that tell us? Well, the revenue aspect tells us that the government wants to see these companies generating sufficient revenues, sufficient profits, so that they have the ability to pay down their taxes, to pay their royalty fees to the government. They're going to bolster the government coffers, and that's the first thing the government is looking out for. The second element, the punctuality, is related to the public interest, okay? The public is interested in a reliable service that gets them from A to B to C in a timely manner. And that is vital in this industry. So let's take a look at those two elements in more detail. We start actually with the mainline routes, and these are the 8 routes that are run between the main cities in Táillín and capital city. And what we see here is we have Premium Trains present. They have 2 of the 8 mainline routes. East Trains has 2 routes, Filton Trains with 1, Nexus Trains with 1, and North Star with 2 routes. And we see the revenues then earned in T dollars, in millions of T dollars. We see that East Trains is the leader with 263 million T dollars generated on the main routes. And Premium Trains is quite healthy there, coming in at second place on this in this particular area of the market, 234 million T dollars. And we have the smallest one there, Nexus Trains, with 95 million T dollars. What's interesting to look at here is the average revenue. Okay, so we're going to just divide the total revenue for the mainline routes by the number of mainline routes. So with these trains, we divide 263 million T dollars by 2. It gives us average revenue of 131.5 million per route. And when we do that, what we see is that East Trains is coming out on top for average revenues per route. And second is Premium Trains with 117 million T dollars per route. The lowest then is Nexus Trains with 95 million dollars per route. They only have 1 route, so easy to see that. So let's dig into those numbers a little bit more. What it means is that with the market share per train operating company for just the mainline routes is as follows. We have East Trains leading the way with 29%. Premium Trains is actually second with 26%. And North Star's 22%. Filton Trains 13%. Nexus Trains 10%. Okay? The total mainline route segment of the market is worth 909 million T dollars. And that would translate actually to 42% of the total revenues for the total train passenger services market in Táillín. We're going to look at the short line routes and add those shortly, but that's what it will add up to. So that means that 58% of the revenues are actually going to short routes. And as we said before, Premium Trains is missing out on that chunk of the market. So that should be of concern to Premium Trains, even though they're doing quite well on the mainline routes. Why is it that East Trains has got such a significant advantage when it comes to average revenues? And we see in the paragraph underneath this table, we have a clue here. Only the two routes operated by East Trains are actually high-speed routes. Natural then that they can command a premium from the passengers for higher speed service. They're going to get you from A to B much more quickly than Filton Trains or Nexus Trains or whoever else. They have these high-speed routes and they take advantage of that by charging higher rates to their passengers. Of course, then, we need to think who influences that, whether these are high-speed routes or regular routes, and you would have to say it's the government. The government is investing in a lot of this infrastructure. They're maintaining and upgrading the tracks, and they have a huge influence there. The rest of the train operating companies in this space, they have to feel a little bit aggrieved because East Trains has got a significant advantage there. Because the government is invested in these high-speed routes, East Trains has the ability to charge a premium to their customers, and that's going to probably not going to sit well with the other operating companies. They're probably going to be going to the government and pressuring them to invest also in high-speed routes for their particular routes as well. And we see there that in 2019 there's actually a plan to have a new high-speed rail line for Filton Trains, so they can surely avail of take advantage of that fact when the new high-speed route comes into play. Another interesting element is mentioned there, that each of the high-speed routes is actually electrified. That would be as opposed to diesel engine locomotives, etc. And that would influence as well the fuel costs for train operating companies. We'll see when we look at the financials that Premium Trains has a significant outlay in terms of its fuel costs each year. And it's going to be advantageous to a company if they're operating on electrified routes. There's less of a reliance then on petroleum, on diesel, etc. Looking then at the punctuality, the performance for the different train operating companies, and here is we see that Nexus Trains is the laggard. They are actually late or very late on, well, it looks like they're almost 50% of their routes. They're not performing well at all. Premium Trains is there in the middle, not doing too badly, not very far behind North Star and East Trains, who are the leaders here. And indeed, North Star and East Trains are the leaders when we look at the short routes as well. So they've got their act together. They're the biggest train operating companies. They're the most punctual operating companies. That's not a coincidence. The fact that they're getting their passengers to their destinations on time is going to be a big advantage to them, and they're going to have higher customer satisfaction, higher repeat custom if they can get people to their destinations on time. Also, it's significant because there's another financial element to getting customers to their destinations on time. If companies are very late, then the customer has the right to claim compensation, and that cost Premium Trains about $2 million. It costs them about $2 million $2 per year. We'll see that when we look at the budgeting figures, so not insignificant. And as we've seen, Premium Trains is not at all doing too badly there. You can imagine for Nexus Trains and Filton Trains, they're going to be way behind. They're going to be paying out many millions, maybe into the tens of millions in compensation to customers for being late. So you have to say that Nexus Trains is maybe in danger of being cut in 2020 when the franchise rights are up for negotiation again, when the government is deciding on which companies to give those franchise rights to. And in the paragraph underneath this section, we see what it means to be late. So on time means that the companies are less than 10 minutes late at the final destination. Late means between 11 and 30 minutes late, and very late means more than 31 minutes late, or a cancelled service. So very late is where compensation kicks in. So on the long routes, it's 31 minutes or more late, and then they have an obligation to compensate their passengers. Looking at the short routes then, and we have another table, we have some new names popping up, but we have some familiar names too. The most notable absence for us is Premium Trains. They are not present in the short route segment of the market. But we do have North Star present here, we have Nexus present, we have East Trains present too. So they're able to further bolster their revenues by operating these short routes. They won the franchise rights here, and it's adding to their top line, their revenues. Again, what I'm going to look at here is the average revenues. When we take their total revenues earned on short routes, divide them by the number of short routes that they're operating, and it'll give us the average revenue. And what we see is that the leader here is actually Comfort Trains, which is an average of 67 million $T per route. Doing quite well there. They're obviously charging good prices and or getting high occupancy rates. In other words, the percentage of their available seats is quite high, the ones that are being taken. And the lowest performer here is Nexus. Surprise, surprise. Oh no, I stand corrected. It's actually East Trains with just 44 million average revenues per route. Having said that, East Trains is doing very well on the long routes, and this additional revenue from the short routes is bolstering their top line. Nexus then has got 44.5 million average revenues over the short routes, and we also see in a bit that they're suffering with punctuality on the short routes as they were with the long routes. They're really vulnerable, you would say, to being cut by the government in 2020 when the franchise rights are being negotiated again. The total revenues for the short routes are 1.275 billion $T. So it's a bigger slice of the market. It counts for 58% of the total passenger services market in Thailand. And as we said before, Premium Trains is not present here. They're missing out. You would not be happy with that as a shareholder, and you would expect the management team to be looking for ways to get in there. How? Well, they could lobby the government, for example. If they don't have close ties with the government already, they should surely be looking to establish close ties. We also see the market share split over the short routes. The leader, it's a joint leadership held by Comfort Trains and Capital Trains in percentage terms, but actually Capital Trains has got a higher total revenue of 209 million $T against 201 million $T for Comfort Trains. Nexus is the laggard with just 7% of the short route revenues. And what we see is that 30% of the short route network is actually electrified. By 2020, that's going to rise, in fact, to 40%. So that will aid faster services as well, and it would impact on fuel costs and things like that, which is going to be advantageous for the train operating companies for both costs and also in terms of the prices they could charge to customers. They can be higher if they have a faster, more efficient service. Punctuality on the short routes. Look at the laggards. Nexus Trains, surprise, surprise. And what a misnomer this is. Speedy Trains falling behind. It's way behind. Look at that. It's like 50% almost of its services are either late or very late. And overall, you would say that companies are struggling on the short routes with punctuality. Even the leaders here, East Trains and North Star, you would see that 20% of its services are actually running late. So even for the best on the short routes, 1 in 5 of their services is running late. You would be concerned about that. And you would ask the question as to whether the Thailand government on the short routes is setting targets that are too ambitious. We see below in the note in the last paragraph of this section that short routes are deemed to be late if they're more than 5 minutes late. With the mainland routes, it was actually 10 minutes or over, and the differential, we're told, is because of the relative difference in length. So we can assume that the mainline route journeys on average are twice as long as the short services. Late then,
means between 6 and 30 minutes late, and very late is 31 minutes late or over. And it's when it's over 31 minutes late, or where there's a cancelled service, that compensation kicks in. So Nexus definitely a laggard, both on the short term and the long term, on the short routes and the long routes, and you would be concerned about them. Later on, there's an article in this pre-scene about Nexus trains, which again offers a snapshot of dissatisfaction amongst their customers with their services. Certainly they're very vulnerable.